Hi, everybody. My name is Ben Scribner. I'm a regional sales manager for Angel Oak Mortgage Solutions. With me today, we have Bruce Krug, your local account executive in North and Central New Jersey. Glad to have everyone have a chance to take a watch, listen in. We're going to cover our primary products today, our bank statement and our DSCR product we call investor cash flow. But also want to get into some general non-QM talk. What non-QM is, what it isn't, and go through all of that as well. But Bruce, if you want to introduce yourself, talk a couple minutes about yourself, and we'll jump into it.
Hi, my name is Bruce Krug. I am in New Jersey. Been in the mortgage industry for about 25 years, so I come with a vast background. I actually was a broker, so I've lived in the shoes of many of you as a broker. I had 4 offices in 4 different states, so I'm compassionate to what you guys go through. I understand your frustrations and certainly will help you get through a lot of that and do my best to solve all your issues quickly. Available for your emails and calls anytime. And we're going to educate you on some of our top products and really help you to understand them and grow your business through the non-QM side.
Perfect. As I mentioned, we'll jump in. We'll just jump right into bank statements. Bank statements, and we'll get into some detail. It's about 65%, I think, Bruce. Of the non-QM market in general, not just Angel Oak, but bank statements are a huge part. So, we'll go over this, in relatively quick, but we'll get into some more deep conversation. But Bruce, you want to take us through the bank statement program?
Absolutely.
And then we'll touch on some of those do's and don'ts.
Absolutely. So the bank statement program is one of our key products. Something I always like to stress is even if your borrower can qualify with tax returns, with 2 years tax returns full doc, the bank statement program sometimes gives you more income to help them buy more house. So it's a real positive, even if they qualify going with their 2-year tax returns, to basically look at this program and see how much more house you could buy. Your realtors will appreciate that, and it'll help you make more money on larger loan sizes. So a couple of key points here. We'll do up to $3 million on this program. We do 12 or 24 months bank statements, so personal or business, so you can qualify them either way. 2 years seasoning on foreclosure, short sale, bankruptcy, or deed in lieu. We do only offer a 30-year fixed, so that's a key point to remember. The borrowers must be 2 years self-employed, and they can own as little as 50% of the business for our bank statement program and business bank statement program, and as little as 25% for personal bank statements. We do purchases and cash out refis in this program. We also, from a product scenario, we'll do owner occupied, second homes, and non-owner. We do also have a 1099 option. This is a great program for, say, your realtors. You guys deal with a lot of realtors, and they've become some of our best customers based on their 1099 option, and we could talk about that on each scenario you have. We also offer a 40-year interest-only product. So the first 10 years is IO, then it converts to a 30-year fixed. Nothing for you to do; it just automatically will convert. We do use an expense factor of 50, but that is something that we could look at and get you a lower expense ratio based on a CPA letter, based on what type of industry they're in. And that's, again, something we could look on at a case-by-case basis. Non-warrantable condos, definitely allowed in this program. So you're not going to get bounced out for having a condo that is non-warrantable. There are certain guidelines, and again, case by case, we could look at that. And loan amounts greater than $1.5 million, we just ask that we do 2 appraisals through our approved appraiser list. And that's kind of the basis of the bank statement program. Again, it's one of our more important programs. Probably do about 65% of our business on that. And it's a great way to work with CPAs or, just with your realtors, because these people generally buy larger properties, and those mean larger loan amounts to you.
Absolutely. And Bruce, what's the benefit or the downside of going 12 or 24-month bank statements? What's really the difference in the two?
So really, the only difference is you get a better rate when you go with a 24 months bank statement. It's about a quarter better on the rate. But one thing that's an upside, and I always suggest this to my brokers, is let's do both and see where the income comes in stronger, because we're not going to look at it in a negative way. If one comes in better than the other, we're going to use the better of the two. So the best thing to do is to get 24 months bank statements if you can, and then let's analyze it and see which comes back with a higher base income for your borrower.
Perfect. And you mentioned realtors. What other types of borrowers? A lot of the questions that are going to come out, from originators is how to go find these borrowers. Like, where are these borrowers? When you talk about self-employed, I think a lot of people miss how many self-employed people. And I loved how you started out saying that, hey, buying power is a huge, huge thing. You may have a self-employed person who's reporting so much income, but they only can qualify for X. They want to go buy Y, and that's just that does draw that up. But what other kind of industries? I know realtors. I think I'm not sure what the percentage is off the top of my head. Maybe the percentage of realtors or real estate individuals that use this program. But what are some common types of borrowers that fit this model?
So your independent contractors for, say, like an Uber driver or somebody that just is a contractor for a company, a consultant, a hairdresser, anybody that is technically you would think is self-employed, but they are a 1099 worker would qualify for this. And if you use personal bank, the 1099, you get all the income, and you don't have to worry about any sort of expense ratio on that. So it's a real benefit to use a 1099 person. We just ask that if it's during the current year that you're looking at and the 1099 hasn't been issued yet, we're going to look at a couple months personal bank statements just to take an average and work those in, so to make sure that their income staying consistent with the 1099 income. But it's a real aggressive program, and you'd be shocked at how many people that are looking to qualify for a home or 1099, and this gives them a real opportunity to buy a home which they never really had before.
Oh, that's perfect. And I'll add one thing in there that W-2 co-borrower. That's also something that a lot of people don't think about when you have that self-employed borrower, but they have a spouse who's just a normal W-2 employee. I know we do require it to be a different company, but that borrower can't work for the other spouse. But that W-2 co-borrower that income can come in, which is huge.
Something also that you guys don't always know about is you don't have to do the income yourself, which is a big advantage. We do all that calculation for you. You just imagine the nightmare of calculating 24 months bank statements. So we have our own internal system that basically you send us the bank statements and we come back with the income for you. So you don't have to worry about doing all that number crunching and paperwork. It's all on us. We take care of it, and usually within 24 to 48 hours, which has been a lot faster lately. I'm going to come back to you and tell you what your income is for that borrower. So it's not any hard work for you guys.
Perfect. And with TBDs, that's also another big part when you're talking about pre-approval in a purchase, in a purchase market. So with a TBD, we always like to say, hey, we'll work that income for you. You can reverse engineer it with our ratios, which if you want to talk about our front and back end DTIs as well, but for pre-qualification, we do, we do a ton of those.
Mhm. Yeah, that's a huge advantage. Your realtors will come to you for a pre-qual, and you could basically tell them how much house they could buy after we analyze those bank statements. So, they're confident showing houses up to that purchase price amount based on our ratios. Now, Ben had talked about our ratios. So our ratios are a 40 front and a 50 back. And we are pretty stringent on that. We don't really make any exceptions on those ratios. So, just make sure that you're calculating in all their debt based on the income we put in, and you're coming back with, the proper ratios. It's very important that they fit the mold and, don't go over those numbers.
And after the income's derived, is there any difference between a bank statement loan and a traditional loan? A lot of people, I think a lot of loan officers have that thought that a bank statement loan is that much different.
There really isn't any different. We follow pretty much the same rules. Once that income comes in, you're basically going to go forward and do everything you would on, say, a Fannie Freddie deal. Order your appraisal, basically have your assets and reserves, and it becomes a normal deal. We're just using a different source of income, and it's just an alternative to somebody that files their tax returns aggressively. We all know that self-employed people basically do everything they can to avoid that, and we give them an alternative because we know they're making money. We know that the money's there to pay their mortgage and pay their expenses. It's just they don't file their tax returns that shows their income.
Absolutely. I'm trying to think if there's anything else we really want to cover. I mean, it does go up to an 85 LTV, which is definitely pretty aggressive. Starts at that 680. So, I'm not sure if you have anything else you want to touch on bank statements, but again, 65% of our industry, and that's industry, not just Angel Oak, is bank statement. We're primarily a purchase industry. I think we're 70 to 75% purchases right now. So that's, we're really geared, toward these borrowers historically as well. So, did you have anything else you want to throw on for
I just want to just stress one thing that I get asked a lot about, and I primarily handle New Jersey, and New Jersey is a non-prepay state, and all our loans basically have no prepay because obviously we're not allowed to do one in the state of New Jersey. So just bear that in mind when you do write transactions, that you don't have to worry about being in a loan forever. I mean, it just gives you the pricing is aggressive without the prepay, and that's a question that kind of pops up a lot.
Absolutely. And we'll get into our investor cash flow, which is probably where anyone, and again, probably people who are, and your Pennsylvania clients or your New Jersey clients who are doing loans in Pennsylvania or Connecticut or Florida, or, wherever else, where those prepays do apply. That's always a good point. But well, let's talk about our investor cash flow product. This is our second most popular program. This is about between 30 and 35% of our business, which you can see is almost all of non-QM is either a bank statement or an ICF. We do have full doc options, but these are our bread and butter products, I like to say. But if you want to take us through investor cash flow, these are, this is a great program. So.
Yeah, so this product is probably our second best product. As Ben said, we do about 35% of our business through this product. It's a great way to increase your business. Investors have been growing, and your realtors are always looking for ways to increase their business, and this product gives them a way to do this with very, very limited documentation. You're qualified based on the property's cash flow, which you're leaving your 1003 with very, very little information, no employment, no income, and you're going off the cash flow of the property, which generally is the appraisal, the rent schedule on the appraisal. So we will do loans up to $1.5 million. Our minimum loan amount is $75K. And as I said, the qualification is based on the property cash flow. So when you get that rent schedule on the appraisal, that's pretty much what we're going to use. Our minimum debt service coverage ratio is 1. We will do a no DSCR if needed with a minimum FICO and a max LTV, a minimum FICO of 700, excuse me, and a max LTV of 75. So we're never going to look away from one of these transactions. There will be a way to work it if their FICO is good enough, based on what kind of rental income comes back on that appraisal.
Say it doesn't cash flow. We just take that 5 LTV off, and we can still do that deal.
Yep, it's a hit on the LTV as long as their FICO is good enough, and we will still do that deal. So we're not going to look away from one of these transactions based on the rental income coming in a little short. No personal income or employment information required. So as I said, your 1003 kind of looks kind of on the blank side, like the good old days. The Ninas of the old days. So yeah, it's still a great loan though, you know. We will do short-term rentals and VRBOs, no condo hotels or hotels. So just be really careful of that. You know, if they have a rental desk in there, that's a condo hotel. We don't do that. Properties can be in LLC's name. I get this a lot. As long as everybody that's in that LLC is on the transaction, we are good with that. There's no hit on the rate or LTV for an LLC. So, you know, that's key because a lot of investors do buy properties in LLC's names. No limit on total number of properties. So a borrower can own 50 properties. We don't care. You know, as long as they own a primary residence, that is key because we look at this as an investor product, not a primary residence product. So they have to own a primary residence. If I would say occasionally I get this, that a borrower does not own a primary residence, but they do rent, but they have a very strong history of rental properties and a portfolio of rental properties. And we will look at that on a case-by-case basis and consider that for this product. So again, don't turn away a borrower just because they don't own a primary. There are certain circumstances that we still can make that work if they are a strong investor. You know, they have a portfolio of investment properties. We will do purchase and cash out or rate and term refis on this product. Again, we also offer the 40-year fixed with the IO. Great for cash flow for your investors. They love that. It creates cash flow. They can buy more products. Buy more properties. So, you know, investors, it's all about cash flow, and you know, people use this as a business. Non-mortgable condos, again, are allowed, and loan amounts greater than 1.5 million, as we said before, will require 2 appraisals. Again, sorry, go ahead.
Yeah, no, I mean, you mentioned cash flow. Obviously, that's the crux of this program. You know, we get a lot of inquiries about, you know, borrowers with cash. You know, people coming in, buying them, you know, investment properties with cash and looking to do cash outs and things like that. Do you want to talk a quick minute about delayed financing? That's always always a popular option.
Yeah, so the delayed financing product basically kicks in when your borrower buys a house or a condo or whatever type of property they're buying, and they're paying cash for it, but they want to recoup their cash. So what happens is we basically, if they refinance with us within the first 6 months, we're going to use the purchase price of that property and do what we call delayed financing, and we'll get them most of their cash back based on their credit and the LTV they qualify for. If it's after 6 months and they want to, you know, do the same product, basically it becomes a cash flow, and we could use the appraised value if they did any upgrades or renovations in the property. So this is strictly for recouping your cash based on the contract price, purchase price of the property when they bought it. But this is very popular in situations in markets that are very tight and bidding wars go on. If they want to grab this property and they have the cash up front, They buy it, and then this delayed financing product kicks in, and they can recoup their money to buy an additional property or what have you.
I've never seen an investor buy a property in cash and want to leave that cash in that property. I've never seen it before. So that's a great, definitely a great option. And I'll add on to that. One thing we don't do is fix and flips or rehab loans. So we don't do that kind of work. If you have a borrower who's going to buy something and want to recoup their original investment, the property does have to be in livable condition. In order to use that new appraised value, they do have to own it for 6 months. So if you have a borrower who's looking to buy up a property and then put money into it, remodel the place, and then they want to get their rehabbed value back, they would need to own it for that 6-month period in order to take a new appraised value. But we don't do that fix and flip piece. We always want to, a fix and hold. That's our type of borrower.
Something else that I've come across lately, 1031 exchanges. This is a great product for that. People have to, when they do sell a property, they have to reinvest, and this product is a great avenue to take your borrowers through for their 1031 exchanges.
Absolutely. And before we jump into our quick quote system and all of that, max finance properties. Do you want to talk a quick minute about how many deals we'll do for someone, because we do run into that very often.
Yeah, so the max we will do for any individual is 5 properties. We don't want to take on an investor that has 50 properties. We will take on an investor that has 50 properties, but we will only do 5 in that particular LLC or individual's name. We could, refinance them or cash out on them, but we won't take on any individual that owns more than 5 properties under our umbrella.
Absolutely. Yeah, that exposure is a real thing. Again, we do a lot of exceptions. So if you have that 6th property, definitely send it to Bruce. Let him get a look at it, and let us get it to our credit risk department and see if that's something that they'd be willing to approve. We'll get that exception up front in the event that adding that 6th property, if it makes sense. I mean, if you have a borrower with great track record and things like that, that can always be a mitigating factor to add that 6th property. So definitely don't pass them up. Let Bruce take a look at them first. But we definitely want to get into so that's great. So we've talked about bank statements. We talked about ICF. So self-employed borrowers, we don't report all that income. Investment properties where a borrower can't fit traditionally. Either they're not reporting all their rental income, their write-offs are too big, they're over their maxed finance properties, they want to go LLC vesting or IO, what have you. A big thing is how to get this all qualified. How do you get this pre-qualified? How do you get this loan started? So we'll take you through. And again, guys, everyone, you can always start right from our website. Everything can be found here. So from our program, if you're not currently signed on with us, our application package, all of that, but our non-QM quick quote is a great tool for everyone to use. It's quick, easy. You can do it from your phone. If you ever want to take a quick snapshot on, if someone can fit just the broad strokes. And again, I'd always use this as a guide because if you need a couple points of FICO exception, if you need, a little loan amount exception, if you want to go over $1.5 million on an ICF, we can do that, assuming that this borrower can, it looks strong. So we can make exceptions on it. So I always want to preface that a little bit. So you want to just come in, you want to select your channel, either broker or non-delegated. We'll just stick with broker now. Bruce, you want to give me a bank statement scenario?
Just two quick things. Just 2 quick things. The website is angeloakmsmarysam.com, and you do not need a login to get on this site. So most people try to log in. You don't need to. You could, like Ben said, you could do it on your phone. You could do it on a computer, and you do not need a login to get your pricing here. Just a quick overview of it. Okay.
Thank you.
Sorry.
Good reminder.
So let's do a $250,000 loan. with a 760 FICO. Let's do a 65 LTV. And we'll do good housing history, 1 unit purchase. Let's do a 24-month bank statement product. And owner rock. Yeah, everything else looks good. So as you could see, you got to make sure that you fill in all the blanks. One thing to just be wary of, if you do our DSCR product, make sure you choose investor as your occupancy. It's key. Otherwise, you'll get an error. You won't get pricing. Very important.
See this red. You'll see this red if you don't update your occupancy. So make sure you get to that.
That's a common mistake. So just make sure you're looking at your occupancy. As you could just see, if you scroll down to the prepayment penalty, that's going to come up as no prepayment penalty. So if you're in New Jersey.
Yeah. Absolutely. Jersey, very important. You always want to keep this at 3 years because it does have a cost to buy down or buy out a prepayment penalty. So for New Jersey borrowers, definitely just make sure this is, and this only pop up with investment. So there's no prepayment penalty on owner-occ properties. But if you're doing an investment property, just keep this at the 3 year. That way it doesn't impact any of the other, any of the other pricing for you.
Yeah. All right, so let's pop back to the bank statement.
Yeah.
So as you could see, it shows you bank statement. It shows your requested LTV at 65. It also shows the max LTV that you can qualify through this product for. It shows the rate at the 65 LTV, which is 6.75. 24 months bank statements, 24 months seasoning, and it's 6 months worth reserves on this product. And if you click on view rates, it will give you, options based on lender paid options or borrower paid options for getting, your rate and your back end yield. So very important to look at those rates. Do you want to take them through? He's going to choose the par rate.
Yeah, so just to move into the next section, in order to send the pre-qual, so you can always come here to do a quick check, a little spot check saying, okay, do my FICOs work with my loan amount, my LTV, and things like that. If you get a rate populated, that means you're within the basic construct of our program. So in order to send a pre-qual, so say you have a DSCR loan or you have a bank statement loan and you want to send it up to Bruce to get the income ran, or to spot check, an investor cash flow. You would always, once you get to an eligible program and rate, you just want to hit view rates. You can select any rate you want here. This is not a lock. This is just a rate site to give you an idea of cost credit. So you can always just select 100 and then hit continue. Again, this isn't a lock. So, it'll bring you to this section, and I'll let Bruce take the next section. But you don't need to upload a 3.4 currently. We do have some programming coming into place where if you do upload a 3.4, it'll actually do some pretty cool tech. When registering a loan, it'll be different. It'll be just almost like entering a case number and then importing everything over. So it's gonna be pretty cool once all that's live. So this is just so you can just hit next. You can skip that part. But Bruce, I'll let you take it from here.
So just to expand upon this, once you have a deal that you want to work through Angel Oak, the advantage we have here is we're going to pre-qual that file. And, I'm going to take a hard look at this loan, make sure you fit into our guidelines, your credit is up to our standards. So you're going to get back a pre-qual that's very solid, and you're able to call your borrower or your contacts and be confident that, the loan is ready to go through as long as you provide the proper documentation going forward. So this is a big advantage. I don't suggest using our pre-qual. I suggest using your own. But you'll have this, as a backup to know what's needed to get this loan done. But this is generally the next step once you have a deal in place and you like what you see after we've talked or you've gone through the quick qual. So basically, you would choose me as your account executive, and then type in your company, Joe Lender. I don't know, Ben, if you want to type in there.
Well, we don't. I mean, we don't really need to fill out this part. You just.
Okay.
And I apologize. My dog is barking in the background. I'm sorry. Yeah, you just want. Yeah, you just want to, enter your company information, your information. This is meant to be quick and easy, obviously.
Yeah.
But then the most important part.
Yeah. So the most important part is, these are the key elements we need to actually do the pre-qual. You're going to drop your 1003 in there. You could, that's really key. We need to make sure that your 1003 is really complete. So drop it right into that section. Take it right off your software system. Then you're going to drop your credit report right into the next section. Basically, your 1008 you don't have to worry about. That's kind of old school. We don't even deal with those anymore. But you go down to the next day. If this is a bank statement loan, you're going to drop your bank statements right into that section. Basically, one thing I do ask to make it really easy on our review team is make sure your bank statements are labeled and you don't miss any months, because if you do miss months, they're going to come back to you and ask for them, and it just slows down the process. They do get back relatively quickly if you do miss still, but labeling them, making sure all your bank statements are in there, whether it's 12 or 24, is what I suggest. It'll speed the process up. There is, for a self-employed questionnaire, if you look up one section, basically that also streamlines the process. It tells you ownership of the company. Ben, if you open that, yeah, if you have that filled out, it'll just make the transaction go a lot smoother, and you'll know how much income they do qualify based on their ownership and so forth. It can be filled out by an accountant. It could be filled out by your borrower, so and so. Just, you're gonna upload that once it's filled out with your file. I'm not going to tell you, this is an important aspect. If for some reason you can't get it immediately, still send the bank statements in. We're still going to look at it, but it's something that will really help the transaction go a lot smoother. But don't let it slow you down if
Absolutely.
you can't get it.
Yeah, absolutely. This is something that if you don't have this information, you can download it, you can send it later. But we can take care of this during that pre-qual process. As Bruce mentioned, it does take 12 to 24 hours to get bank statements ran, so you don't have to. We do have some time, in the middle of this. So that's important. You just want to make sure you have your 1003, your credit, and your bank statements uploaded, and then after that.
Yeah, just remember that if it is a DSCR loan, you're not putting anything in the bank statement. Basically, it's just 1003 and credit. So, but anything additional you could drop into there. Any comments on the transaction? That's really the nuts and bolts of what we're doing here. Just make sure your contact information is there. Once you submit that, it comes directly to me. I receive it. I usually get back to you really quickly. We review it. If it's a bank statement loan, I will submit it to our bank statement review team. They will analyze it within 24 to 48 hours. Usually it's quicker, as I said. And then I will get back to you with the pre-qual. And at that point, if the loan is pre-qualed properly, we can go forward and register and lock and order disclosures on this transaction. So it's a pretty smooth way to do business. Very, very efficient, very easy on you.
Absolutely. I think one of the biggest things for Angel Oak is our process. So the reason why we've done more securitizations, why we've done more volume, why we're the leader in this space, is really because we've been doing it for so long that we've reinvested all of our time and energy into our process. So this is designed to be extremely quick and easy, and obviously having local account executives there to help you along every single step of the way is absolutely huge. So we do want to, we're running a little low on time. We do want to jump in the marketing portal just to show people, hey, that's great. You kind of know a little bit more about these programs, but where do you go find these borrowers? How do you market to these borrowers? Things like that. Our marketing portal can be a great, great way to get that out to your networks and stuff like that. So if you don't have credentials, please reach out to Bruce. Bruce can get you credentials. You do need to be able to get into our TPO portal in order to get to our marketing section. So our marketing portal is not on our regular website. You do need to log in to do it. But Bruce can get you credentials. Takes takes a matter of an hour or two to get you credentials to that. But when coming into into our TPO portal, it's their turn times and our wonderful account management team and all of that. But you can come right to our marketing portal. And, the big thing, flyers are, of course, the tried and true. A lot of us, have used flyers for our programs and using an email form and everything like that. So we have a ton of flyers for all types, interest only. We have our highlights, do's and don'ts, CPAs. We have them on all of our products and some niche kind of stuff. We talked about Delight Financing. There's kind of and these are all delabeled as well. So if you were going to do an attention realtor, you can come up here and you just enter, you put all your information, your logo and your picture and everything from that side. And, and you can download this. These are all delabeled. So none of this says anything about Angel Oak. This is for you. So, always a great piece to come in here and use. And you could take, some of the information on these, if you do your own marketing, you could take some of these and create your own marketing piece on it, some of the bullet points. But also in the marketing portal, we have our presentations. Realtor presentations are huge. Bruce, if you want to talk about, realtor presentations for a quick minute.
Yeah. So, realtor presentations are huge where, you can get in front of a sales meeting of a realtor and, get 20, 30 realtors. This presentation, you bring it up on the big screen, you go through all the products that we offer. One thing, I certainly would be open to coming in, taking care of lunch for your realtors and making this presentation a great experience with you. We'll both be there. We'll ask questions. Honestly, it stimulates the market incredibly well. One thing we always talk about when you do these realtor presentations, you almost always come out with a loan from one of the realtors in the audience. They love the 1099 program. As soon as they hear about it, they're like, oh, I could do that for myself. But it's a great way to, realtors are always looking for content at their sales meetings. They get, week after week after week, it's always the same. So you bring in something like this that talks about, non-QM products, which a lot of the realtors aren't super familiar with. It's a great way to acquire more market share through that realty agency. So, like I said, reach out to me. I'd be happy to, come make a presentation with you and help you acquire that agency. One other thing on the marketing side, social media, a lot of these brochures that we have, they're great for social media. That's become almost as important as flyers. So, we have a whole section on just how to use our social media stuff for posting up and growing your business.
Absolutely. And our social media piece is Instagram, Pinterest, Facebook, LinkedIn. We have, this goes down pretty far. So there's a ton of every type, short-term rentals, our full doc options for ITIN. We have them for just about everything, it feels like. So, we understand that, hey, people are going to you're going to market in a different way than someone else. So you may have someone who focuses more on social media. You may have someone who focuses more on in-person presentations. You may have someone who, just tried and true with flyers. So, we want to treat this as a partnership. We want you to think of Bruce first and to call or text Bruce when you run into scenarios that don't fit those, those traditional boxes. We want to partner with you and do everything we can to help your business. We all know that, refis are very, very few and far between. Purchase market's gotten a little funny, to say the least. So hopefully with inventory climbing, that can get a little bit more of a footing. But I think the spirit today is whatever you do, and let a borrower walk down the street. Telling a borrower no right now is, you want to do everything you can to get that borrower taken care of. So Angel Oak definitely has the products. Non-QM is a way to offset that lost volume. Maybe not entirely, but in part, there's a lot of niche kind of stuff out there going now, which is great. It's great to see a lot of diversity come in the space. But Bruce, did you have anything else you wanted to wrap up on? I know we're right at the cusp here.
I just wanted to mention, I know we talked about realtor presentations, but also, your brokerages, if you have sales meetings or different opportunities where we could make a presentation for your loan officers or your coworkers, we could do it via Zoom, we could do it live. So there, education is key. We're willing to do a face-to-face or a Zoom just to make it easy on you folks and help you grow your business. On a sidebar, if that's not something that can be worked out because people are working super remotely, please reach out to me, call me, email me, text me, whatever mode you're most comfortable with. I'm always willing to analyze a scenario, try to structure it, and we can tweak it any way we can to make it fit and get that borrower taken care of. I truly appreciate your business and I appreciate you looking at this video. We're here to help, and we're here to help your business grow.
Awesome. Well, thank you everyone for attending, for listening, for viewing, and again, any questions you have, please feel free. Please, reach out to Bruce, and we'll take care of you. Awesome. Thank you, Bruce. I really appreciate it, and hope to see everyone soon.
Appreciate it. Have a good day.